Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. The Monetary Policy Board of the Central Bank of Sri Lanka has decided to maintain the overnight policy rate at 7.75%. The decision reflects the bank's continued focus on guiding inflation towards the medium-term target of 5%, while supporting economic recovery and global uncertainties. According to the central bank, current monetary conditions remain appropriate to balance price stability with growth. Inflation has stayed subdued, while overall economic activity has continued to strengthen. Inflation measured by the Colombo Consumer Price Index stood at 2.1% in December 2025. The bank noted a slight increase in food inflation driven by high festive season demand and supply disruptions caused by Cyclone Ditwa. Core inflation has also shown some recent acceleration. However, headline inflation is expected to gradually rise and align with the 5% target by the second half of 2026. Economic growth momentum remained firm during 2025. The economy expanded by 5% during the first 9 months of the year. Although activity slowed temporarily following Cyclone Ditwa towards the end of the year, early indicators point resilience supported by reconstruction and recovery efforts. Private sector credit growth strengthened in the latter part of 2025. This reflected improved business confidence, high economic activity, and increased vehicle imports. The external sector continued to support macroeconomic stability. Gross official reserves increased to $6.8 billion by end 2025, including proceeds from a swap arrangement with the People's Bank of China. The external current account recorded a sizable surplus supported by strong worker remittances and net foreign exchange purchases by the central bank. After depreciating during 2025, the Sri Lankan rupee has remained broadly stable in the early weeks of 2026. Looking ahead, the Monetary Policy Board highlighted upside risks to inflation. These include potential demand pressures from relief-related fund issuance and possible global supply chain disruptions linked to geopolitical tensions. At the same time, downside risks remain, such as inflation staying lower than expected or improved agricultural output easing food prices. Sri Lanka's apparel exports extended their recovery in 2025, closing the year above the $5 billion mark. Industry data showed the performance was supported mainly by steady demand from key Western markets, even as shipments to non-traditional destinations weakened. According to statistics compiled by the Joint Apparel Association Forum, exports of apparel and made-up textile articles recorded growth in December. Earnings for the month rose over 5% year-on-year to around $447 million. This December, performance lifted full-year apparel export earnings to approximate $5.02 billion. That marked an annual growth of over 5% compared to 2024. When fabric exports are included, valued at over $526 million, total sector exports reached to close to $5.5 billion for the year. The apparel sector last crossed the $5 billion threshold in 2022, while the first time this milestone was achieved was in 2018. A closer look at December figures showed growth across Sri Lanka's main export markets. Exports to the United States increased by more than 6%. Shipments to the European Union, excluding the United Kingdom, also grew by nearly 7%. Exports to the United Kingdom recorded the strongest monthly growth, rising by almost 13%. However, exports to other markets declined by just over 4%, limiting overall gains. Despite this, the United States and the European Union together accounted for around 71% of December exports and contributed most of the year-on-year increase. For the full year, the European Union, excluding the UK, emerged as the strongest growth driver. Exports to this region rose by over 12%, highlighting its key role in supporting the industry's recovery. Exports to the United States recorded modest growth, while shipments to the United Kingdom remained largely flat. Other markets showed a moderate increase over the year. The Joint Apparel Association Forum noted that the closing the year above $5 billion reflects consistent performance across core markets, with the European Union providing the strongest momentum. The forum also said the improvement in December exports to the UK alongside continued growth in the USA and EU was encouraging. However, it cautioned that the decline in other markets underscores the need to diversify demand and strengthen non-traditional destinations. Looking ahead to 2026, the industry plans to focus on improving competitiveness, ensuring delivery reliability, and building buyer confidence through consistent quality and responsible production. Expanding access to new and emerging markets will remain a key priority. Sri Lanka's tea recorded an increase in production and exports during the period January to December 2025. However, the national average price declined compared to the corresponding period in 2024, according to industry data. Total tea production for the year reached 264.12 million kilograms. This was an increase of 1.43 million kilograms from the previous year. All three elevations recorded high production volumes, although CTC low-grown teas showed a decline while high and medium categories improved. Tea exports also increased during the year. Shipments rose by 11.56 million kilograms to 257.4 million kilograms. Despite higher volumes, the national average price of tea sold declined. The average fell to 1,167 rupees per kilogram, down by 57 rupees compared to 2024. Prices declined across low, mid and high-grown teas in both rupee and dollar terms. Low-grown teas, which accounted for over 60% of production, recorded the largest price drop. High and medium groans also saw lower average compared to the previous year. In export markets, the average FOB price remained largely stable. The rupee value edged down slightly, while the dollar value showed a marginal increase. Total revenue from tea exports increased during the year. Earnings rose to 453 billion rupees or $1.51 billion. This marked a notable improvement compared to the same period in 2024, supported mainly by high export volumes and improved performance in tea bags. Iraq emerged as the largest importer of Sri Lankan tea for the year, followed by Russia and Turkey. Exports to Iraq and Turkey increased while shipments to Russia declined. Exports to Libya rose, while exports to the UAE recorded a decrease. The report noted that the tea industry continued to face macroeconomic challenges. These included fluctuations in supply and demand, currency movements, and political conditions in importing countries. On the global front, China continued to dominate tea production, recording steady growth through 2024. India maintained relatively stable output with minor fluctuations, while Kenya showed a strong recovery. Sri Lanka's production, although improving in recent years, remains below earlier peak levels. Overall, the data highlights improving export performance for Sri Lankan tea even as price pressures and global challenges persist. Sri Lanka's export earnings surpassed $17.2 billion in 2025. Extending the recovery in external trade. The growth was supported by gains in both merchandise and services exports, according to data compiled by Sri Lanka Customs and the Export Development Board. Total exports rose by 5.6% year-on-year to an estimated $17.2 billion. This reflected improving global demand, a rebound value-added agricultural exports, and steady growth in services linked to the knowledge economy. The outcome brought export earnings to nearly 95% of the official target for the year. The Export Development Board stated that the performance demonstrated the resilience and competitiveness of Sri Lanka's export sector. This was supported by the recovery of key markets, sustained production capacity, and the continued implementation of export development strategies. Merchandise exports were the main growth driver in 2025. They increased by over 6% to $3.58 billion. Apparel and textile remained the largest contributor, with earnings rising to $4.91 billion. Exports to the European Union recorded strong growth, while shipments to the United States and the United Kingdom also expanded. Tea export earnings increased to $1.51 billion, supported mainly by higher packet tea exports. Coconut and coconut-based products emerged as the strongest performer, with earnings surging to $1.23 billion, driven by sharp growth in coconut cream, oil and milk powder. Food and beverages exports recorded strong expansion, supported by high-processed food exports. Electrical and electronic components as well as seafood exports also posted moderate growth. Services exports continue to expand, reaching the $3.76 billion. ICT and BPM exports recorded solid growth, while logistics and transport services also improved. December data showed continued but uneven momentum. Total exports for the month increased to $1.49 billion, led by merchandise exports. Apparel, coconut-based products, food and beverages, seafood and gems and jewelry all recorded notable growth. However, services exports declined during the month, highlighting short-term volatility despite positive annual performance. Several sectors also faced pressure in December, including tea, spices, electrical components and ornamental fish. The United States remains Sri Lanka's largest export destination in 2025, followed India and the United Kingdom. Exports to the European Union as a bloc recorded strong growth, while shipments to free trade agreement partners India and Pakistan also increased over the year. Overall, the 2025 performance points to a gradual strengthening of Sri Lanka's export base. However, the data also highlights the need for greater market diversification and a faster shift towards high-value goods and services to support sustained growth. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.84%, down by 9 basis points. The 182-day T-bill rate stands at 8.26%, down by 10 basis points, and the 1-year T-bill rate stands at 8.36%, down by 11 basis points compared to the previous week. Thank you for watching. We'll be back next week.